Hey, it's Jeff Green with Green Financial Group. Thanks for tuning to the video blog today. Today, we're going to talk about cash. Stick around, I'll be right back. So cash has been kind of a hot topic lately. I've had a lot of clients call and ask about, hey, Jeff, do we need to raise cash? Or, we're just investing in cash in general. And cash has gone, there's about $5.2 trillion in money funds currently. And that beats the peak right before the pandemic of about $4.8 trillion. So there's a lot. So there's more money in cash funds right now than there was at the peak of the pandemic. So we can talk about all the reasons for that in another video, but I wanted to talk about a little bit about pros and cons of having cash. So pros, liquidity, right? So we have cash. I can't tell you how many clients have called and said, hey, need a new roof, or your AC goes out. And of course, if you're in Houston, your AC is only going to go out in July and August, right? So you better make sure you got cash in July and August to fix your AC. So little things like that, you have a rise for cash. Another good pro of cash, we call it dry powder. So you have some cash sitting to the side, maybe to invest should you get a market pullback. So it's always good to have a little bit of dry powder there. And then maybe a third is just having an emergency fund. Again, kind of along those same lines of needing the new AC or whatever. But I think you should always have an emergency fund of cash anyway. Typically, it's the rule of thumb anyway is about 3 times your monthly income is what you want to have set aside in cash. So it's always a good idea to have a little bit of cash there. There are good money market rates out there, so it can be found. And if you're going to hold cash, hold it accordingly. So some cons of cash are typically over time, most other asset classes have outperformed cash. Cash typically doesn't pay a whole lot. So stocks in general have outperformed cash over the long term. Many other asset classes have outperformed cash at the long term. And then really don't forget that the dividends on your cash can be taxed. So that's a consideration. Now that I know that there are municipal money market funds which are tax-free and you get a tax equivalent yield, but generally speaking, when we set aside our cash, we're going to collect dividends. And remember, those dividends are not going to outpace inflation typically. So you have to be careful. And on top of that, those dividends are going to be taxed. So it brings it down a little bit more. So always consult with your advisor and figure out what your particular optimum cash level should be and go with that. So thanks for tuning to the video blog today. Remember, any questions, concerns, or comments, feel free to reach out to us. And remember, stay the course.